Well, hello, everyone, and welcome to your Daily 5. I'm Joe Duarte from Joe Duarte and themoneyoptions.com, author of the best-selling Options Trading for Dummies, known as 4th editions. If you like what you see here, please consider a subscription to my website, Joe Duarte and themoneyoptions.com. And also check out my Buy Me a Coffee page, which I'll tell you about at the end. All right, today, we want to talk about why this bull market is still alive and where the stealth money is going. So our goal is first getting a grip on the current market, and we're going to look at interest rates. We're going to look at the stock market trend, and most importantly, we're going to define and identify market sectors where stealth money is moving in. So where we are right now, interest rates and inflation may be cooling off. We saw the recent CPI and PPI numbers suggesting that maybe things are slowing down, which is great news. And of course, because of that, the economy is shifting gears. And it is possible that the Federal Reserve may be done raising interest rates by the end of this year. So the first part of the big picture is bond yields. And if we look at the U.S. 10-year Treasury note yield, TNX, we can see that we've had what looks like a triple top here. And of course, this goes back to October, and this is March of 2023, and this is current action July 2023. You see that area between 4 and 4.3%, maybe is 3.9%, has been basically a trading range. And this triple top looks like it's going to hold. Of course, a lot remains to be seen here at that 200-day moving average. But if we can get a move below that, back to the 3.3 area, that's a very bullish situation. So interest rates are on our side for now. Interest rates are hugely important because Treasury interest rates, of course, set the mortgage rates, and the mortgage rates are very important because the housing sector is about 11 to 15% of the economy. So you can see here the mortgage rates, this is of course a little bit delayed data, has risen, but as you saw with the Treasury note yields falling, we expect mortgage rates to fall, and that I think will be bullish for the economy and the housing sector. So let's look at the big picture, and we have several things to look at here. Currently, the Nasdaq 100 index is in a huge bull run, might have come a little bit too far. It's outside the upper Bollinger Band here, and so we may see a pullback. But until proven otherwise, this remains a bull market. And there's several things to look at here. All right, number one, and this will become clearer in the next few slides, but number one, we saw a major bottom in accumulation distribution, which means that the short sellers began to cover. And that was back in the October through January period. And you can see that the same thing happened to unbalanced volume. And of course, that means that buyers came in. Now, here's where volume by price is important. And I have this arrow here because this is where the breakout came in. And notice how when this prices cleared this volume by price bar here, that was what really lit the fire in the Nasdaq 100. Of course, a lot of it is fueled by AI. But again, you can see that before we got here, money was starting to move in. And I want you to keep that in mind because this is what we're going to be talking about in some detail in a little bit here. Slightly different picture in the S&P 500. The bottom was a little bit less impressive as far as taking forever to materialize from October to December. And you can see that the accumulation distribution here took a little bit longer than it did in the Nasdaq 100 to kick up. But again, short covering. But you notice how with unbalanced volume remaining fairly flat, it took a long time for the S&P 500 to clear this volume by price bar. And of course, volume by price is what I consider the battleground between the bulls and the bears. So when prices break above the big volume by price bars, that's bullish. And of course, when they break below, as they did here, that is negative. So the S&P 500, lots of short covering, a little bit of less buying. And again, as the slides progress, we'll see why that's important. So what's a stealth sector? So two things are important. One is that there's out of favor news. Nobody wants this area. It's going to be going down in price forever. At the same time, when you see bad news and you see positive money flows in the sense of the price bottom holds, ADI turns up and OBV follows, or some combination of this, you know that stealth money is moving in. And so let's look at the past year a little bit. You can see that we made big money in housing and AI of late. And of course, this is perfect illustration of how stealth money works. Again, you see a triple bottom in the QQQ here, which is, of course, where AI lives. And you can see that the accumulation distribution turned up. On balance volume made a huge bottom here as the buyers just basically disappeared and the sellers took over. But guess what? The bottom held up. So bottom held up, the news is awful, and the money starts moving in. And you can see that this is just huge. And of course, look at this big breakout above this volume by price bar cluster. And you can see where we are right now. We're going to probably consolidate some here, but there's no evidence at this point that money has stopped moving in. It's a little bit more or clearer here on this housing ETF, XHB. And you can see that we had the bottom basically materialize down here in October, November. And if you recall, that's where interest rates were above 4%. Everyone thought that no one was going to ever buy a house again. And of course, the market was already discounting. And you can see in this case that on balance volume actually turned up before accumulation distribution. So this is even more bullish because that means that buyers came in before the short sellers scampered. Look how much buying there was before the short sellers finally gave up. So this is very, very bullish. These are the things that we need to concentrate on in order to get in on new trends early. So where are we now with these new trends? All right, so the first one is the first stealth sector is the oil service sector. And we see that familiar pattern developing here. Right about here, everyone was saying that no one was ever going to use oil again. And that basically the things were never going to be the same as far as traditional energy. Guess what? Money started coming in. And here you can see that on balance volume actually started climbing up, such as we saw in the housing sector. This is very bullish because that means that buyers came in before short sellers started getting out. Again, we've seen a lot of gains in a short period of time, so we might get some consolidation. But as long as this pattern remains in place, this is still a stealth sector, and there's still plenty of negativity left. So we might see some consolidation here, but as soon as that happens, we're going to probably be moving higher. The second stealth sector is the building materials. And again, similar picture to what we've seen before, but look, here we go. We got nobody wants building materials because the economy is going to crash. The Fed's going to kill everything by raising interest rates. The news is just horrible. And guess what? Short sellers start scampering, prices start stabilizing, and we're now looking at what could be a very important triple bottom here. So once on balance volume turns up, that means the buyers are really getting into things. And we can see this sector explode. The final one, and this one is going to take a little bit longer to develop because the news here is so negative and has been so negative for so long. But uranium, as in the global X Uranium ETF, symbol URA. And we're starting to see the familiar signs develop here, although a little bit more slowly. So this one could take a little bit longer to materialize. But look, same thing here. Got a 1, 2, 3, maybe a, what do you call it? A quintuple bottom developing here. And again, accumulation distribution is rising. And on balance volume is actually rising. So there's short covering. There is actually money moving in. And we have this consolidation pattern above this last volume by price bar. And of course, that means that at this point, the buyers are starting to overtake the sellers. So a little bit more shaking and moving around here and forming a base. But again, this looks like it's going to be a great place to put some money if you've got some patience. So to recap, we have interest rates that may have topped out. Could take a few more months before we finally see that confirmed by the Fed, but the market is already betting on it. Housing and AI have come a long way. These are likely to be long-term bull markets, but right now they've come a long way, so we can see some consolidation. So we got some new leadership emerging, and that means that stealth money is moving in. So we've got oil service, building materials, and nuclear power. That's all I have for today. Joe Duarte from Joe Duarte and the moneyoptions.com. If you like what you see here, please consider a subscription to my website, Joe Duarte and the moneyoptions.com. And I want you to check out my Buy Me a Coffee page. That's where I put new and additive content to what I have on my website. And so I have things like the chart of the week, weekly real estate update, and special reports with in-depth analysis and all kinds of new stuff coming all the time. This page is growing thanks to you. I appreciate the support, and please check it out. Finally, remember that trading is uncertain. We should always be prepared.